I have the dual challenge of taking an hour presentation and doing it in 10 minutes, and I think I'm speaking right before John, so that's also, we'll see how it goes. So as Hugo said, I'm going to talk about kind of the shift from startup nation to scale-up nation. Just a quick intro on us. We manage about $1.5 billion. We're one of the largest technology investment groups in Israel. I think the more important thing in terms of, less so about the dollars managed, it's more about the exposure that we have. We have more exposure to Israeli startups than any investor in the world. It's really as a product of what we do. We do three things. We have fund of funds. We're investing in the venture capital funds. We have secondary funds that buy out investors from the venture funds as well as companies. And we have a co-invest fund where we're looking into those portfolios, trying to pick the best companies and investing alongside the investors that we're invested in. And because of that, we have a massive database, lots of information, and again, exposure to more Israeli companies, private technology startups than any investor in the world. The other thing that's important to note is that we're not just investing in Israel. We're also investing a lot in the US. We're investing a lot in the UK. And it makes us not be myopic, meaning we're able to compare what's going on in Israel with what's going on in the venture capital market in the rest of the world. One more thing I'll add, and this is important for the startups and maybe even the corporates in the room, we're leveraging our database of companies and our exposure to companies to help corporates find startups to work with. We do this as a free service. So again, if there are corporates in the room, please take into account. We're working with nearly 300, been very successful in leading to purchase orders and proof of concepts with startups. I think every startup will tell you that's the lifeblood of a startup. So we'd be happy to help. So let's dive in. Let's talk about the Israeli technology ecosystem. I think we've already touched on some of that. Israel's a very small country, for those who've been, small population, but in all the innovation ranks, we talked about scientists and engineers per capita, scientific papers, innovation. Every year we rank in the top 5 for every single category when it comes to innovation. So it's a small country, but it's fundamentally innovative. And really, it doesn't happen in a vacuum. It's because of these various ingredients. I think that everybody knows about the military's contribution. Everybody knows about the government's support. Everybody knows about the universities and the technical institutions. I think Hugo also touched on this, but I really think that the key ingredient here, and something that doesn't get talked about enough, is culture. So the whole idea that there is no fear of failure, and that even more so that I think being an entrepreneur in Israel is viewed as a profession, almost as if somebody wanted to be a doctor or a lawyer, although I'm not sure who really wants to be a lawyer these days, but a doctor, lawyer, what have you. Being an entrepreneur is a job just like any other job, and that's a passion, and they aspire. They see Waze, they see Mobileye, they see Orcam, and people want to aspire to that. I think that's really critical that we don't see in a lot of other ecosystems in the world. The other thing is this. I mean, Israel is a hotbed, I think, as many of you know, of large international corporates who are doing R&D in Israel. This is a small fraction. There are about 300 in Israel, corporates that are doing R&D. And if you look at the logos really closely, you'll see logos from California, of course, from the UK, from Europe, and even from China. So the entire world is coming to Israel to do R&D development in Israel, and that's very unique. The other thing, and again, this was alluded to, Israel's a very different venture market. When we look at the UK and we look at Europe in particular, and even in the US, we see a lot of consumer products or business consumer. And I think that we do have that in Israel. We're seeing more and more. But really, Israel is a lot about infrastructure and core technology. We might take that core technology and apply it to consumer markets, but at the end of the day, cybersecurity, cloud infrastructure, video and imaging processing, these are the key differentiating factors that make Israel a very interesting market. And even digging deeper, there are specific sectors like cybersecurity, but automotive, for example. I mean, automotive a few years ago wasn't a sector. Now we call it mobility. Israel is now a leading center in the world, most likely because of Mobileye, for automotive technology. So let's talk about the venture market in Israel. This is one slide on the entire history of venture capital in Israel. Started in the 90s, big boom in 1999, 2000, then a bust, started rising again, then another recession, and now when we talk about scale-up nation, it seems to be on its way back in quite a big way. In fact, if we look forward, we're projecting that there'll be between 40 to 50 Israeli venture capital funds, local Israeli venture capital funds, over the next 3 to 4 years that'll raise $4 to $5 billion. And if I had to guess today, I wouldn't be surprised if those numbers ended up being larger. And we're actually, again, going back to the scale-up theme, we're seeing more and more local late-stage funds. Before 2010, there was no local late-stage fund in Israel. We now have 6 or 7 or 8 at this point. So there's a lot of growth capital in the market as well on a local level. And we have a full ecosystem, again, early-stage micro funds, late-stage foreign investors, so on and so forth. So it's very robust. And if we go back to looking at how much the local Israeli venture capital funds are raising, we're also seeing a dramatic increase. Every year now for the past 4 or 5 years, it's been about $1 billion or more raised by local Israeli venture capital funds. And in fact, just through the first half of this year, Israeli venture capital funds have raised $1 billion. I don't know if the number will end at $2 billion for the year, but clearly it's growing and growing. And again, within that, there's a bunch of late-stage capital as well. And we're also seeing an increase in the number of startups. You know, let's go back to 99-2000 when there was $7 billion raised by Israeli venture capital funds. It was chasing after 600, maybe 650 startups. Now the money is chasing after 1,400, 1,500. That's more than, or about 4 a day that are being created in Israel. Again, seeing a dramatic increase. And if I think about it from a financial perspective, from supply and demand, if we look at the amount of capital raised by the local Israeli funds that's chasing after the startups, the ratio is very attractive. In fact, the best results of Israeli funds were in wave 1, when again, there was not a lot of money chasing after the startups, and in wave 5. The 2 more recent waves are too early to tell. However, you know, if we think about the $1 billion being raised by the local venture capital funds, this is the amount of money going into the startups themselves. So again, a big increase. And last year, it was $5 billion, $5.2 billion. This year already, just in the first quarter, it's on a pace to be $6 billion this year going into the Israeli startups. It's a dramatic number. Again, go back to 2000, it was half that. And that was a bubble. But what's most interesting is where this money is coming from. This money, again, is not coming from the local Israeli venture capital funds for the most part. It's actually coming from outside of Israel. So 85% of the money is not coming from the local venture capital funds. Most of that is foreign venture capital funds and strategics that are now investing in Israel. I think probably all the startups in this room and those that are presenting today, most of them probably got money from some foreign VC or from foreign strategic. And again, that's where most of the money is coming from. And it's these. You know, these are the best funds in the world. It's just a sample. It's not all of them, so forgive me if I forgot somebody. But they're all investing in Israel. And I know, you know, we invest in these funds overseas as well. We know what their results are. They are doing fantastic in their local markets. They're coming to Israel as well because they know they can make venture capital returns. And again, going back to what I said earlier, they're getting something very differentiated. They're getting much more deep technology than they're seeing in their local markets. And going back to the scale-up theme, these are the investors that are coming in and putting a lot of money in many cases into the late stage, into the growth stage, to take these companies to the next level. And if you look at, if we break down that $5.2 billion last year, for example, you see how much money is going into the mid stage and the late stage versus what it was back in 2013. So it's up more than 3 times the money going into the late stage from 2013. And then this will just help these companies scale even more. Now, it is having an impact on valuations, as you see here. As you can imagine, if there's a lot of money coming in at a later stage, then valuations are going to be going up. So you do see that in particular in these C and D rounds and so forth, that's been the biggest increase. At the same time, I would say that this is well below what we're seeing in the US and even in some cases in the UK. So while valuations are up in the later stage, it's definitely lower than it is in other venture markets. So let me wrap up with this about the exit environment. You know, we're investors. You know, we want to see returns. We want to see the money back. You know, exits are very important to us. If we look, this is just VC-backed exits. These are M&A, mergers and acquisitions, when a company comes and purchases a startup. It's been running at about, you know, $2 billion or more since 2011. I mentioned Waze. Waze was $1 billion in 2013. It's actually slowed down quite a bit in the beginning of this year. It's similar to last year, and some people might look at that and say, wait a second, you know, that's not such a great sign. I kind of look at it differently. I think, in fact, that most of the Israeli companies now, the startups, are striving to build large standalone companies and don't want to sell their companies. And this used to be the case quite a bit, and they're actually aiming for IPOs. And I've been working with Israeli companies now for over 20 years, and I would say there's never been a time, at least that I remember, where there were as many scaled up, ready for IPO companies than at any time in that period. And I think that, you know, going forward, we're going to see in the 2019, 2020, 2021 period, If the markets hold, we could see a few dozen IPOs of Israeli companies. Again, this is just a sample of the potential logos. So I will stop with that. Thank you.